I did a talk called How to Survive, which drew on my experience as a Boy Scout, which is if you're in unfamiliar terrain, if you are disoriented, if you're dehydrated, what do you do to survive? And I think that many of us went through that phase. We need to design our organizations for uncertainty, and being able to be more nimble and more flexible and agile as a matter of course, just because 2020 proved how uncertain life can be. But going through a near-death experience makes you stronger in the long run.
I think out of the pandemic, what you've seen is that the businesses who have been able to pivot their business model a bit or pivot how they do things and react in an agile way have been the most successful businesses. Don't leave yourself inflexible. Make sure that as new information comes in, you're able to react to them. So these black swan events that might only happen once a lifetime, it doesn't make sense to set your business up in case there's another pandemic, because that makes you inefficient. But it's a mindset that is then put into practice by the way that you set things up, the way that you set up your systems, the way that you choose your priorities, the way that you structure your teams.
A few years ago, people were saying, okay, do you know how to use Excel? Do you know how to use Word? Do you know how to use PowerPoint? In a few years, people will expect you to be able to use automation tools to digitize some of your manual repetitive work, because that's going to improve your productivity. And the pandemic has actually created a clear urgency that people had to go this way, because any business that is not designed to operate digitally would not succeed. We now learn to actually be far more in demand with our human capabilities in our future jobs, because the very repetitive, simple tasks are going to be taken over by software robots that we create and we control.
The pandemic has been very interesting, highlighting a lot of issues that many of us were aware of for some time, but they've really come to the fore. Black, minority, ethnic founders have really had ongoing challenges in accessing investment compared with their white and often male counterparts. And at the same time, where you live is a second challenge. Put those two together, and as a Black woman founder living in Leeds, that's an incredibly challenging issue for you to deal with. So we've had to really look at things from a different lens, and as investors make changes.
2020 showed us that even the most certain predictions can be eliminated by a problem that affects humanity. For every real entrepreneur, there is something at the very core of everything that we're doing, and this is the purpose. Why is it so significantly important for me to solve a certain problem? Right now, it is even more important to really think, what am I doing with my limited time on this planet?
For many investors in the pandemic, it's actually really changed their thinking, and they will build issues like social impact and sustainability into their investment thesis. So when you're an entrepreneur approaching investors right now, you need to really think how far you can show that you're going to make a really strong impact, either socially, environmentally, globally, that will really help you tune in to where investors are focused right now. So it won't be enough just to have a great technology. It's got to really have that wider and deeper sense of long-term impact. And I think that's really going to attract investment much more successfully in the year ahead.
We see a lot of businesses that have a very strong purpose-driven approach. And that really, I think, is going to be a lot of the future for global development. We had feared that COVID would derail us. In fact, businesses actually are embracing the Sustainable Development Goals as an opportunity. Because of the disruption that we're going through, there are many opportunities opening up here for social entrepreneurs with the right business model, with the right outreach, with the right thinking around how to leverage digital technologies in a better way. We need a lot of innovation, a lot of creativity in those spaces. It doesn't need to be a trade-off between profit and doing good. It actually can be both.
On the space station, you realize how interconnected we all are and how interconnected we are with our environment. When I look at what's happening around the world, is shaking people up to realize that when a problem happens in Wuhan, it impacts the entire world. It can bring large economies to their knees. And this time was a virus. Next time it could be something different, climate change, for example. So let's not just be naive and let's do something now. From everything we've learned, I see more people talking about long-term thinking because they don't want to deal with something like this again.
We have the opportunity to create businesses which follow a new set of rules. What we've given up to a certain extent is our wellness, as we're being invaded by too much news, too much information, too many demands on our time, and being able to step back and say, that doesn't contribute to my wellness. What does is having the time to go for a walk and to switch off. How do we build companies which take people's need for that lifestyle into account? How do we design jobs which don't infringe on our physical and mental wellness? And that to me is the essence of Build Back Better.
Hi, everyone, and welcome to the panel on diversity, inclusion, and innovation in venture funding. My name is Nicole Beach, and I'm a student at Saïd Business School, and I have the honor of being the moderator for this panel. In this panel, we're going to discuss why underrepresented founders such as women, BAME, LGBTQIA+, continue to face issues accessing funding. And today we are joined by excellent panelists who have been working to break down these barriers in the venture funding ecosystem. So we have Jenny Tooth, who is the CEO of UK Business Angels Association, the National Trade Association representing angel and early stage investment. Jenny has 20+ years of experience supporting SMEs access investment in the UK and internationally. Then we have Thea Messel, the founder and managing partner at Unconventional Ventures in Copenhagen, a Nordic micro VC investing in early stage startups led by underrepresented founders. And Thea has invested in multiple purpose-driven startups, all founded by women. And then last but not least, we have Andy Ayim, founder of the Angel Investing School, whose mission is to get more women and people of color investing in the world's most successful startups. Andy also coaches organizations on how to set up high-performing product teams. I know that this is quite a charged topic and there's going to be a lot of discussion, and we obviously cannot do that justice within an hour. But we want to leave as much time as possible for questions. So please, all attendees, submit any questions you have in the Q&A function. And we will start. So to the panelists, you know, in the last year of events, we've seen this huge charge of effort around improving representation across various industries, and venture funding is one of them. And my question to you is, what do you think is causing the lack of representation? Even though we have all of this discourse and there's so much spotlight on it as a result of last year's events, do you think it's a market problem or an investor problem? For example, is there lack of diversity in founders starting companies or in the investors? Are the sourcing methods the issue? Yeah, so I'd like to open up to you all, and probably starting with Andy, seeing as, you know, this is a big mission for the Angel Investing School.
Sure, thank you, Nicole, and it's a pleasure to be here today. So I'm a firm believer that entrepreneurs can come from anywhere if given the right access. And if we look at the brief history of venture capital, it's an industry that's actually really grown over the last 50 years. And the original contributors who really started the industry were a lot of the times middle-class white bankers, actually from New York, like Mr. Arthur D. Rock. And what happened is this capital from this narrow set of contributors was going into entrepreneurs who were from their networks. So either people they had worked with before, people they'd maybe gone to school with in Oxford and Cambridge or in Stanford before. And therefore, there was a narrow set of entrepreneurs that were benefiting from this capital. And as we know, wealth really compounds generation after generation. So as these entrepreneurs exited, again, they were investing in more people they knew. And you know, the National Venture Capitalists Association reported 2 years ago that 87% of venture capitalists are white Caucasian men. And it's no surprise that the founder base is quite similar. We had a report from XDead Ventures in the UK that reported that 0.02% of entrepreneurs in the UK are Black women. And that's not because Black women aren't capable of starting businesses, but it's because they haven't got access to the networks of capital and entrepreneurs to really get into these almost like exclusive old boys clubs, which is venture capital. So a lot of the work that we do at the Angel Investing School is actually to train up and activate a new investor base so that we can get more women and people of color invested in the best startups in the world. Okay, and the other thing that I wanted to add to this challenge is that there's nuances to investing in people from different backgrounds. Okay, and one of the classic ones in venture is a lot of angel investors or venture investors say that they want to invest in teams of 2 or 3 and teams that are full-time, not part-time. But actually, if I've grown up first generation in this country and I'm working class, I might have to support my mum or my grandma back home in Ghana, and actually my daughter. So actually, like, that's the reason I'm part-time, because I actually haven't got the friend and family round that you have access to because of your privilege to really have the runway to give it a go and to try and build a company. And this is a really important distinction, because what we're talking about here is that initial burst of capital, that opportunity check, so that you have the runway to experiment and try to find a business model that's repeatable and can scale globally. Okay, some of those entrepreneurs will still fail, undoubtedly, because starting a business is a high risk venture. However, we should all have equal access to that opportunity, and that's where we're falling short.
Amazing. I mean, you mentioned, you know, this cycle almost of, you know, the old boys club having access to this capital to launch, and then, you know, bringing in those that they know. And I guess the question is, there really a way to break that if right now that's where most, if not, you know, exclusively all the capital is found? And to your credit, if you aren't born with that privilege, you know, what options are there, you know, for these underrepresented groups?
Yeah, so we often hear that these groups are, you know, over-mentored and under-invested. And the truth is we need to do a lot more work on the investor side. There's nothing wrong with the pipeline and the talent out there that want to start companies. Actually, we need to change a lot of the mindsets here on the investor side. So, you know, I'm making my contribution to really diversifying the pool of people we call angel investors. But, you know, there's also systemic issues around even regulation. So, for example, in the UK, you can't actually really be an angel investor unless you're a high net worth individual or a sophisticated investor. In America, it's even worse because you have to have this accredited investor status. And the reason that's challenging is because I could have a younger brother who's starting a business, and I know my younger brother very well, and I'm not allowed to invest even £5,000 to £10,000 into him, but I'm allowed to invest £5,000 to £10,000 into GameStop, into that trading issue that just occurred. But that's high risk. That's equally high risk with your money. So why have the rules been bent when it comes to private companies versus public? And these are the discussions we need to have with regulators around actually the control of capital and understanding how we can influence more investment into this asset class. And I'm not to say that it doesn't come with its warnings, but there should be equal opportunity across asset classes.
That's fair.
Yeah,
that's fair.
Completely. If I can add on a little bit to that, Nicole, I completely agree with Andrew. I think there are some regulatory constraints in order to actually make startup investment more inclusive. There are, however, some amazing trends. We have seen a lot of crowdfunding. Crowdfunding has unfortunately been viewed by the more establishment, like the VC funds, like something they don't want to invest into, which is, I think, is completely wrong and really bad signaling that should not be allowed even. I think there are some movement now, just like we saw sort of syndicate, how you syndicated at Angels before, like a decade ago, was also so not seen as a good way. Now this is like common for, and this is how people invest now. So I think that the merging of the whole crowdfunding and the way that we're actually being able to democratize investments is getting more and more attention, which is really good. And I think also back to who are actually allowed to invest. One thing is that you need to have a lot of wealth in order to be allowed to do that. But it's also down to how have people built that wealth. So there's sort of two ways that we have sort of a vicious circle in terms of increasing the diversity of people who are actually able to invest. One thing is that it's typically people who've been in the corporate industry for a long time, had their career, and then sort of cashed out at the end. Then there's another sort of really expanding pool of successful founders who've done quite quickly an exit. But as long as in Europe, it's still 93 of all venture capital is going to all male team. And as long as we still withhold that structure, which unfortunately has been stable for the last 10 years, and it's the same for the UK, it's the same for Central Europe, it's the same for the Nordics, which is where I'm based, even the most equal region in the world, and we have the same problem. 93% of venture capital is coming to all male teams. So I think there's a really need to find other innovative way of changing that, and like Andy's Angel School is one of them, looking also into innovative sort of vehicles of how you can invest in venture could be one of them. When we were set out to raise our first fund as a first-time manager, that was extremely difficult. But what we did was, instead of setting up an alternative investment fund, which in itself should be actually more accessible for people because you're diversifying investments in high-risk assets like early venture is, one way that you actually could do is actually pooling a group of investments into startups and actually select them through syndicates. That could be a way to lower the risk, but at the same time get your allocation in early stage venture. And I think that's really what we hear from the founders that we meet, is that they also want more diverse cap tables. So they want more diverse investors in their companies. So that's also an argument for why people should really start investing more in this.
Amazing. And Jenny, would love to hear from you, especially having done this for so long.
Yes, thank you. And some great points put forward so far, and totally endorse them. I mean, just looking at it from the kind of UK angel market perspective, and Andy's touched on it a lot, it's just been really interesting to see how continuously low the number of women investors are, as well as those from Black and ethnic minorities. So if you look at it at the moment, even with all the progress we've made, it's still only between about 15 and 18% of the whole of the angel base are women. And then only about 11% are from ethnic minorities. And if you look at that, that's very concentrated in the Golden Triangle. So that's London, Oxford, Cambridge. So if you get outside there, the number of women investing, or those from other diverse communities, is really, really low. And there are a number of issues, and Andy's really touched on it, and they've been touched on already, but it's surprising how little opportunity many investors have who are not part of an already investing population. And so that is really where women and those from diverse communities miss out. So if your friends are not investing, if your own professional network, if the people you talk to are not investing, or they're not telling you they're investing, there's absolutely no transfer of knowledge. There's a real lack of opportunity to enter the system of investing. There's a huge lack of knowledge and understanding. There's definitely a massive perception that you have to be rich. And indeed, as part of a syndicate, as a woman, you can invest as low as 2K. At any one time in a syndicate. And certainly there are a number of angel syndicates operating in that way. And there are lots of myths around the risks of angel investing. And, just to give you a sense, that 90% of advisors never speak to women about angel investing or backing entrepreneurs. They'll tell them to invest in property, they'll tell them to invest in stocks and shares and other assets, but never to back entrepreneurs. So it's knowledge, it's access, it's opportunity, as well as, we've just talked about, regulation and so on. And that cuts right across the board. So we do have a lot of work to do in changing that mix. And then if you combine that with all the lack of opportunity that Andy has touched on, and you put those two things together, it is very, very challenging. And probably the really useful thing to bear in mind is that one thing is that if you're a woman or someone from an ethnic minority, you are likely to focus your investments on those entrepreneurs that that actually are part of your community. So 30 to 50% of women's portfolios are in other women founders, and even higher percentage of those from other ethnic minorities, Black and ethnic minorities. So you've really got to look at how important that mix is, and we do need to mix the whole diversity of the investment base is absolutely as fundamental as having that access points for diverse founders. So, just to give some context, there's a lot of work we need to do, but we know the outcomes could be very, very strong if we could certainly change that mix.
That's amazing. And, it's interesting hearing the perspectives from all three of you. The notion of, knowledge, access, how privilege works into it, opportunity. And then, of course, Thea, you were mentioning, there are ways in which improving this. You have kind of a syndicate option, and Jenny, you alluded to that fact that many women don't even realize that they can do that, right? And I guess the question that poses from this is, what is the real, hindrance to acknowledging why this is happening? Like, is there an idea that investors have to choose between getting that deal versus, diversifying their portfolio? Is it the investors feeling they have to make sacrifices to improve representation in their portfolios? Thea, I would love to hear from you, especially since you think there is some opportunity around changing this.
Yeah, sure. So when it comes to whether you have to sacrifice sort of the potential of profit or not, I think there has been the notion of that female-led or underrepresented founders do not build as ambitious companies or as scalable companies, which is a myth that needs to be busted. And I think there's a growing understanding that as more and more research we actually get a hand of, showing that actually companies founded by women or minorities actually outperforming quite tremendously. You probably heard about the BCG report from a couple of years ago that had the famous 2.5x overperformance from female founders. We see the same on a Nordic level, then it's 1.4 overperformance. And we're actually releasing a report on the Central Eastern European region, which is actually looking at a quite outperformance by female founders as well. So I think more and more research, sort of the community at large is getting more and more understanding that there is outperformance if you back diverse teams. And I think the more time goes by, people will also really understand that we need to build inclusive infrastructures as bigger funds in order to get a hand of that pipeline, because that's going to be very popular to get a hand of, not only from the performance perspective, but also because underrepresented founders also tend to build more mission-driven companies, and more and more, not only the venture funds in themselves, but also their LPs. So their institutional LPs will require more and more transparency about both the founder composition of the portfolio companies of the VC funds, but as well as the ESG, so the positive impact that these businesses are actually building, because research also showing that these are more resilient and they're actually doing better, particularly in the time we're actually in now with Corona, really showing that if you're building purposeful, mission-driven company, doesn't matter what kind of crisis we're in, they're going to do well regardless, and probably even better when we have special times like those that we're in now. So yes, there has been this notion that the stereotype of what does that successful tech founder that is doing IPO within 5 years or 10 years, what does that founder look like? We still need to do a lot of work in terms of really understanding that is not the case, and that ambition and scalability goes beyond the white young guy in a hoodie. But on top of that, we also really need to work on the seed level, because even though we can see the research and the later stage funds want to change, unless we have people on the ground putting money at pre-seed and actually believing in these founders, we are not going to see that change, because then we have an expression in sort of diversity industry that I am, which is the female founder penalty. So research also show that underrepresented founders, they traditionally raise 1/3 in the round. So the ticket sizes of the round are actually 1/3 of the size, which means that you're going to have to pivot, hire less people, and do the same amount of work for 1/3 of the pay. So in a sense, you can actually say it's a huge payment gap, and it's almost an impossible task to get the same sort of traction with 1/3 of the capital. So that's also one area that we really need to look into. And I think one of the solutions is really the institutions like the government grant funds and those who, and our pension savings as well, because the pension funds have very rigid sort of systems on how they can back. It has to be a second or a third time fund. Well, if it has to be there, we're never going to see a change. So there are some even political decision makers that really need to fuel that change, I think.
That's amazing. And what is interesting is I actually hadn't heard of the female fund penalty. That's
well, it's actually
honestly
not me who coined that expression. I have to give credit to the founders of January Ventures, which is a VC, Amsterdam-based VC. Maren Bannon coined the female founder penalty. It's a very good expression.
Female founder penalty. Unreal. But I mean, it's interesting though, you kind of bringing up pre-seed and seed, you know, really starting from that stage, because that's where we really start to kind of pull or push more underrepresented groups through the pipeline. And I'm just wondering, you know, Andy, especially with the angel investing school and kind of like the education around how to build investors or what to invest in and to whom to invest in. What has been your experience around this topic? You know, do investors have to make a choice between diversity and deal?
Yeah, it's interesting hearing Thea actually, because I always talk about the gap table and how actually we're all missing off the cap table right now, right? There's no people of color, there's no women. So actually there's such a lack of perspective on that gap table and so much homogeneity. But the irony is like venture capital as an asset class is designed to actually invest in outliers. So by definition, it should be widening the pool of participants in order to invest in companies that other investors are not able to see as early as they can, right? So by definition, it should benefit from being diverse. And actually the compound impact of that is that actually if we invest in people from different backgrounds, we have people that are representative of the society we live in, building the technology that's influencing the lives that we live. Okay, and what we're seeing, I want to talk about angel and the VCs. What we're seeing at the angel level from the angel investing school is we have about 78% of the angels that we train who are people of color and 43% women. Okay, and just like Jenny mentioned, and we work very closely with Jenny and UKBAA, actually, they have supported us from the beginning. And one thing she mentioned, which is true, is that all of those people that have graduated from the angel investing school and gone on to make their first investments, at least 70% were in women or people of color, because that is their immediate networks. In fact, that is their market opportunity, being able to access those founders that others are not paying attention to and actually getting in at a cheaper price earlier round. The second thing is that, like in America, off the back of the Black Lives Matter movement last year, we saw corporates like PayPal, Apple, so many just flood capital into the market to really support this crisis. And we've seen a lack of that in the UK. And that is really important because that's non-dilutive cash, is grants that you're getting from corporations who are basically filling in that friends and family gap that we spoke about. So it's really important to really get corporates really involved with addressing this systemic problem as well. And the third thing is about VCs. It's really important to understand the structure of venture capital. They raise other people's money. They're raising money from pension funds, from large corporates, and from other institutions. And those people are essentially what they call their limited partners. And therefore, those are the shareholders. And this is actually a matter of shareholder value and shareholder interests. If those limited partners with their voting rights say that I want at least 10% of your portfolio to be from diverse backgrounds, that VC has to take that on board because they're taking their capital, and that capital buys them a voting right. So we really need to do a lot more work on the limited partner level to influence the funds that they're investing in. And that's where we're not doing a great job at the moment. We're focusing a lot on the VC, saying we need more diverse general partners, which we do, but actually we need to go right up to the top of the chain. Like if I had a magic wand, I wish I could be a limited partner like Plexo Capital in the US and invest in diverse funds, right? Because that's what we need to do, or invest in funds and tell them that at least 10% needs to be diverse and we will help you with sourcing, right? Because a lot of people use that as an excuse, like, oh, I don't know where they are. Like, go to Tottenham, go to Lambeth, go to diverse communities. But we're lazy as investors. We want people to come to us, and it's creating the wrong type of dynamic between us and them, and a hierarchy when really all of the values in the entrepreneur, because they're generating the returns for us. So we really need to reframe how we see this opportunity and this problem.
That's so interesting. There's actually two things that are that you brought to mind. Is one, the whole, them coming to us versus us going to seek, the opportunities where they are, because there's some prestige around, founders coming to the VCs, right? And being sought out in that way. And then the second thing, it's interesting that you brought up the Black Lives Matter. I think I read yesterday that the Black Lives Matter organization raised, I think, almost $19 million last year, and they're going to reinvest it into the essentially underrepresented groups to kind of close that, or help close that socioeconomic gap. So I definitely understand and appreciate what you're saying. And Jenny, you and your organization have been supporting this for years. And from your perspective over time, has there been a change? Do you see a kind of a movement or where it's going in terms of really closing this gap?
Yeah, thanks. I mean, I think we do have a number of angel groups who have decided that their thesis is to invest in women or to invest in Black entrepreneurs. And they are mainly either comprised entirely of women themselves or entirely of Black founders. And as Andy knows, we've had some great networks of angels coming through now who see that, they're not choosing between deal and diversity. Diversity is the thesis of their portfolio and the thesis of their investing. So, they are very clear on it. And we are really seeing now some strong groups coming through on that. And of course, they are seeing the outcomes. They are seeing that this does make a difference, and they're not feeling that they're left out of important opportunities. And and we're also seeing, real stories from, and I will have to say, pale males standing up and saying the 6 top performing women in my angel investment portfolio are women. And once you get those kind of stories coming out, then, you can really start to draw attention. And actually this year, and I totally take all the points that Andy made, but with thanks to people like Andy and many others out there, we have really had a focus on investing in Black founders. And I think it has pricked the conscience of many, many angel investors across the UK. And we will continue to do that, won't we, Andy? But we know that people want to take action, but they need direction and they need help. And that's obviously why, what Andy's doing is very important. We need to kind of feed in new ideas, new players, new insights. And I think one of the great things we're doing with Andy at the moment, starting to talk about, which is actually putting new investors in as learning partners, as interns into angel groups, and them actually then making the change. So we things won't happen, if we don't do anything. We all have to create actions and strategies here. But I think we have probably now at the angel level moved past that point of choosing between deal and diversity. But I think there's just still a lack of strategies, opportunities to be able to do that effectively. I totally take the point about the institutional investors, and there's so much to do at that end, but it's a complete pipeline. And if we don't get it right at the angel end, then we certainly won't get it right further up that chain. So we are the starting point. We have to make the changes and make the difference, because that feeds in those great entrepreneurs into the next phase of opportunity and investment. Yeah.
Amazing. This actually segues quite nicely to the next topic that I was hoping we can talk about, because, the whole feeding in the new ideas and players and insights. And I know that we've discussed previously a lot of the work that's done around gender equality and how to promote women investors or women entrepreneurs as well. And it seems, has there been too much of a focus on women, specifically within underrepresented groups? Have we not moved on to other underrepresented groups such as BAME or LGBTQIA+? And it's interesting, like, to see, is this kind of a low-hanging fruit? Working on women and promoting that representation first. What do you think, Jenny?
Well, I mean, I guess it's easy to say it's a low-hanging fruit because it's actually an issue that is not going away. I mean, when you think still how few, we've still, if you take the angel side, there's only 22% of all angel investment going to female founders, and that's mainly in mixed teams. When you get to all female teams, it's only about 10%. So it's really still very low. So the issue doesn't go away. So we won't stop focusing on. But what we do have to take account of, and the very point you just made, is that there are many other issues. And when you take the intersectionality between a woman being in somewhere outside the Golden Triangle where there's very little investment, being Black, or, having not had any of the opportunity to bootstrap, having not had the opportunity to have family money behind them to get them through those first phases, you put all that together and it's not one single issue of, a woman, therefore low hanging fruit, that must be easy. No, this is very complex. And the issues are very deep and wide. So, there isn't really, we can't really just have a kind of siloed approach to that, or just say job done there, we're on path with that one. So we do need to continue with that. But yes, of course, we have come, as I said, into big realization this last year that we are not doing enough about Black, especially Black founders, and indeed, minority ethnic founders overall, generally, we are not doing enough about. There are other really important issues. Neural diversity is an absolutely massive one as well. We have got some investors who really recognize the opportunities there, because as we know, many great founders have often got those neural diverse issues as well. And we know there are some really important players. So it really takes people to push forward issues and find pathways through them that will make a difference. And to be honest, people taking a lead. And what we're seeing is now we have got investors who themselves are either recognizing their own backgrounds and challenges and able to then apply those stories and take leadership. It totally needs leadership. And I think that's really where we're at. And it's the way we will address, across the board, the whole issue of overlooked founders. We need leadership. We need people to, give their stories, but also to talk about what works. And if I take, actions like Diversity VC, where we're now developing both strategies and charter marks, giving people, telling, I can wear a badge and say, I'm doing the right thing. You can come to my group and we know we will treat you, with respect and the opportunity, and look at this as a real opportunity. I think we can start to do this, but it takes leadership, it takes strategies for change, and it's we really do have to work together. It's not something we can do on our own. But I totally take your point. We haven't actually done the job, but there is a lot more to be done in many other areas that have still not been addressed.
Thank you. Thea, I know that you've worked so hard on kind of promoting the underrepresented groups, especially in the Nordics. What's your view on this? Do you find that you had been historically working really on just promoting women founders, or do you find that you started to move toward, or have always moved towards, underrepresented groups?
I think in the Nordics, there's actually quite a big difference between the Nordic countries. The conversation of diversity beyond gender is really picking up in Sweden. So we're based in Copenhagen and Sweden. There is sort of initiatives coming up now, really focusing on a broader sort of categorization of diversity. I think there has been a great development. I'm based in Denmark, which is not only performing worst in the Nordics, it's actually performing worst in the whole of Europe when it comes to gender diversity and funding of female founders. So there's a huge work to be done here. So obviously Denmark is still on the gender agenda, and the Me Too movement came slightly delayed to Denmark last fall. But I think one of the challenges when it comes to diversity is really that there becomes such a lot of communication and a lot of sort of branding buzz. There's a lot of diversity washing going on. Just like we saw the trend with climate change and sort of greenwashing 10 years ago, I think we will also see a movement now in terms, the more and more educated people become around diversity and intersectionality. I think at some points, the ecosystem and society at large will be better at deciphering when is this washing and when is it actually actionable and people actually living up to their words. There's a lot of not putting money where their mouth is at the moment. And that comes from everything from angels to institutional LPs. And that is one of the sort of waves that I'm really hoping that can accelerate on the change part around that. And I think one of the things, I completely agree with Jenny, we need to sort of do better at all stages of the funding cycle. But I would say that when it comes to the top, like Andy also mentioned, we really need to put pressure on the LPs, and particularly the institutional LPs, because this is our pension funds. So it's actually our money who decides what venture funds get the most money, and what kind of policies is at the core of these venture funds. So at the end of the day, we should be the decision makers on how these policies should be set up, how pension funds should channel money the right to more diverse founders, diverse fund managers, and ultimately also to funds who actually invest in purposeful businesses that will create the future that we want for our kids. So it should be actually quite easy. Obviously it's not, it's heavily regulated, and politics in Europe, as we know, it can be complicated. So there's a long way, but there's some quite easy steps on making this very transparent and easy for people to understand, and that is how much are the limited partners investing in diverse funds and diverse portfolios. Full stop.
Yeah, very clear. Andy, I'm sure you have so much to say on the subject as well.
But to be honest, I think Thea and Jenny have covered it all pretty much. The one thing I will I guess add is that, look, there's a number of people in the ecosystem, especially here in the UK, who are trying to do something about it. And, you know, one of the things I am concerned with is, you know, if you don't have someone from representing a diverse group, like someone who has a disability or someone who's LGBT at the table, then are their voice being really heard and acted on? You know, that point of inclusiveness. And at the moment, to be honest, we're not doing a great job of really representing who's not in the room. And that goes far beyond just venture, actually. That goes right into the corporate sphere as well. So I think just as a society, we need to do a bit of a better job in really just thinking about who's not in the room and who's not at the table, and how can we get those voices heard too.
Nice. Actually, this brings kind of the next topic, and I want to make sure that we can discuss this before opening up to Q&A, because all three of you have mentioned, you know, ways in which we can see measurable change or hope to see measurable change, you know, such as putting pressure on the LPs, especially institutionalized LPs, who's in the room, who's not in the room. Are there any other ways that we can push D&I efforts in the investment process? You know, tangible actions versus the diversity washing that you mentioned, Thea.
Absolutely. Could I jump in actually? On
yeah,
this
of
one?
course. Yeah, no problem, Eddie.
I think, yeah, I about 7 years ago, I took a trip to San Francisco, and my eyes were just opened from just the spirit of entrepreneurship, the American dream and the culture. And it was almost like a fast track MBA, learning from the venture capitalists out there. So when I came back to London, one of the things that I started doing was to blog, to really share awareness of a lot of the Black investors and Black founders in America. And I think we need to do a better job here. Like, let's showcase some of the diverse founders that are actually getting through the rounds, are actually growing meaningful companies that are solving global problems, because that showcase works. That's what investors start seeing, thinking, I missed out on that deal. And this industry is so driven by FOMO, that fear of missing out, right? So we need to share more stories actually from a wider contributor of backgrounds. And we need to move away from the stigma of diversity being charity to actually the missed market opportunity. And actually there's an opportunity to get outsized returns for really focusing and doubling down on our efforts down this path. And there's a number of funds such as Ascension Ventures and Atomico who are actually making meaningful inroads in the US, in the UK. But as Jenny said, like, one of the biggest issues actually is the geography factor. And like, if you are in Leeds, if you are in Leicester, if you are in Hull, it's a lot harder to gain access to capital. You can't come down to London. So it's like, how do we build more structures that are more equitable and actually allow us to really invest across regions rather than concentrate on where we can drive to?
Yeah. Thea? anything to say?
Yeah, no, I agree. I think some of the very sort of actionable activities that some of the bigger funds have done is actually providing money to emerging angels. So for angels who don't actually have the money themselves, but are actually giving money by the funds to invest in founders, and that has been a huge success. I know Atomico was one of the first ones setting that up in Europe. So the more of that, that can actually be scaled even further to have government funds actually, granting money for experienced founders or people who has knowledge of the ecosystem to channel funds that way. I think there's also an appetite, obviously, among both angels and venture funds to understand more about their own biases and sort of set that into system. I mean, having biases is not a bad thing. That's natural. We all have them. The challenge is that now there's like 93 of one type of bias. We just need to diversify that type of bias, because we know that's so important in early stage funding, when at the end of the day it comes down to, do I believe in this founder team or this founder particularly, and that person can take this from 0 to 100 or 1,000. And we know from a fact, when it comes to risk, we tend to understand and decipher something that resembles ourselves. So I think it's really down to efficient way of both setting our own biases in structure as established venture funds, and at the same time diversify the type of decision makers, because that is what it's really about. Who are the decision makers who decides who gets the check? And we need more diversification of that.
Jenny, any last thoughts on this before we move to Q&A?
Yeah, just obviously, measurable impacts. I mean, measuring is really, really important. So, the opportunity to collect data from across the investment community is absolutely fundamental. And this year, for the first year, with the Investing in Women Code, if you take just the women part of it, for the first time, all the signatories to that code, which is a significant number of venture capitalists, angel groups, and banks, have now been collecting gender-related data. And it's not just about pipeline, obviously, it's about who gets through the process and who gets invested. And we will be publishing that report very soon through HM Treasury, and I think that's going to be very significant. Therefore, we need to do the same, obviously, with other parts of, other overlooked parts of the community. So I'm hoping that we will do that, and we'll start to expand that approach. So I do believe data is important. Totally agree with Andy about role models and case studies. It's so important. I mean, peer-to-peer learning is what we use to influence investors' mindsets. So they learn so much from each other. So, those who are doing it, imparting that to others is fundamental. And then finally, yes, at big fund level, here in the UK, the British Business Bank is only now cornerstoning funds where there is real diversity, in the LLPs and in the GPs. So that is a very important move. And I'm a great believer in co-investment funds, because you can influence other people's funding patterns and other people's investment decisions by only co-investing with people who are definitely investing in diverse founders, or also having, diverse investors in the mix. So I think there are, you can do some top-down things and also some bottom-up approaches. And there's no one right measure here. We need to build out on as many actions as we can take to really have impact on investing in diverse founders.
I think one thing that Jenny, we've talked about before as well, is just got the government update in certain schemes as well. So, the EIS and SEIS scheme has been around for many years, but actually as funding rounds have increased, even increasing that, and maybe even pushing something in putting some incentives around diversity for that could be useful. And I think the same is true for the startup loans being £10,000 for the last 15 years, but actually funding requirements now have increased. So it'll be good to get on top up on schemes like that also.
Yeah, and just to say, Andy read my mind, because my letter to the Chancellor for his budget next week, it totally includes a request that he considers putting a higher level investment relief into EIS and SEIS for investors who are backing diverse founders. And I put that as one of my headline requests. I'd be looking out to see if Rishi Sunak announces that one next week, and I shall keep trying.
Perfect. Actually, this brings us really nicely to one of the questions in the Q&A as we move to that portion. So we have from the audience, with regards to the difference between public versus private funding, should public finance, so i.e. British Business Bank, pension funds, etc., be held to a more egalitarian standard in terms of investment and procurement? And I think you and Andy touched on this a bit here, and even Thea has mentioned previously. So maybe I guess we'll start with you, Jenny, and then we'll move through.
Yeah, I mean, I think I probably did touch on that. Yes, I think it's, I mean, you know, if we take British Business Bank, it is the biggest holder of equity investment, you know, funds and capital here in the UK. And especially now we've moved out of Brexit and we no longer have the European Investment Fund as the strong, the strong player. Then yes, it's absolutely down to agencies like the BBB to be doing that. And you know, I think they're getting the messages. The fact that they did the research recently about entrepreneurship and diversity, I think does show they're going to do that. So yes, it is down to them. But I think, you know, and again, Thea's touched, and I'm sure she will again, we do need those big institutional investors to see their responsibility in terms of who they're backing. So yes, the questioner is absolutely right. It is very important to be looking at that level of influence and what we can do to address that. There's definitely an opportunity there.
Yeah, actually, Thea, why don't we jump to you, especially since you'd mentioned this a number of times. Yeah, no, I
with the fear of repeating myself, but I think that is a necessity that we actually from the governmental funds and the governmental funds of funds that should have specific targets, and those targets should be publicly known, particularly institutions like EIF, which is not so relevant for the UK anymore, but before was it, obviously. These institutions has a huge responsibility to do something about this change, and that I hope that we can see some measurable actions in this year. I do also think, because since we have all the research, that this is actually good for business, right? So it's actually, there is really down to, there are some structural barriers and structural challenges that makes these funds not targeting or reaching these founders at the end of the day, because we have the proof of them being the best business cases. So there is not really any argument for why this shouldn't be done. They overperform, but they're not getting the funding. So I think if it was the opposite, I could understand that we would need a longer discussion on policies and why this should be good from a societal perspective. But this is just pure profit. So pure profit perspective, this is what you should do. And still it's not happening by itself. I do think, in addition to the governmental funds of funds and institutions that actually put money in this ecosystem, I think we will see a range of progressive family offices. We haven't seen that yet, but I'm quite sure that we will see some big American names really pouring money into investing in diverse founders in Europe. And I think that will be the big wakening up and will create the foam Andy was talking about, because there's no financial argument why you should not channel money that way. It's the structural barriers and the culture that has been obstructing this development. So let's see who will be that first big progressive one, sort of bursting the bubble. I'm waiting, excited.
Great. I'm actually, there's a really interesting question that came in. Do you think that there is a disparity in funding for social ventures? And if so, how can this be overcome?
I do think there's a disparity. I think, you know, like, what we have to remember when we're talking about venture capital is these are investors that are trying to invest in globally ambitious companies that are going to return their fund. So therefore, mathematically, they're thinking these companies every company they invest in needs to grow to like a billion in revenue, a billion in market capitalization. Okay. And historically, like I said, like there's been a narrow set of contributors investing in a narrow set of founders. So that historical data is now influencing their future bets. It's the same kind of issue we have with AI. Like if you get poor inputs, it's going to lead to poor outputs. And sadly, a lot of social ventures they see sitting outside of that, right? Like traditionally, our returns hasn't been from investing in social. And the funny thing is, like this generation that's coming up, Gen Z, are so socially aware. They're so much more influenced by the ESGs that they want to make money whilst doing good. And Jenny mentioned it in the intro video, funny enough, like the importance now of really considering beyond technology your social, environmental, and global impact on the world. Like, and we're seeing the backlash of that with, you know, privacy and Facebook and ethical considerations that weren't considered when we were investing in these advertising driven business models. So now I think the world's starting to learn from a lot of the mistakes we've had. And now we just need to take action on that to make it more equitable.
Perfect. Jenny or Thea, do either of you have comments on this?
I mean, I just wanted to kind of add to that in that I think it's very important to bear in mind that social impact within your business is actually almost a prerequisite now for investing. But you know, and so don't think that because your business is focusing on social impact and that it is going to be regarded as any less important, because I think that investors have totally woken up during the pandemic and totally now recognize that sustainability, social impact, impacting social challenges, global challenges is actually where they should be putting their money. And I guess that's the helpful thing with angels, where they can change their perspective and their investing approach more easily than a venture capital can that's got to build that into an investment thesis. And it's actually the angels who felt most affected by what's been going on around them during the pandemic. And actually coming back to Andy's point about the generations, actually, you know, there are many millennials now who are starting to become angel investors, and you know, and as we get that, you know, they are seeing this as absolutely core to their investment thesis too. So I think we do need to bear that in mind. So I don't think anyone should feel they will not be able to access investment. If you're talking about a social enterprise, that definitely has different parameters in the way you're regarded. Although we have got investors who invest in companies who are not going to be driven by profit, but by social outcomes. But you do need to then select your investors, you know, who are prepared to look at like that. But what I can just say, a quick stat, that when we did a survey just this year, 1 in 4 of angel investors said they were very happy to have companies within their portfolio that they did not see were going to be their top performing in terms of profitability, but top performing in terms of impact. So, you know, I think that's an important consideration.
Fair. Actually, this is another great question. We're getting so many good questions from the audience, and I think this is good as kind of a wrap up to the excellent contributions that the three of you have been making. Someone from the audience says, thanks so much for these great personal insights. If you were to share one piece of advice to future leaders on how to ensure there is more diversity and inclusion in VC and beyond, what would that be? Why don't we start with Thea and then we'll work through.
Yeah, was it from a corporate or from a VC perspective?
So they said from VC and beyond. I'd probably say
So I would say, regardless if you're a corporate or from a VC, I think it's really down to representation matters and representation at the table. So even though you need to work at all levels of the organization, if you're a VC firm, make sure that you have representation among the decision-making partners. So not, you know, only operational partners or, you know, partners that have other that those that actually take the investment decision. That is what will really create change and also will make you attract more diverse pipeline, because founders are very, very sharp, and if there's no diversity among the GPs or among the sort of investment decision partners, then that will affect your pipeline ultimately. So that was for the VCs, and that goes for the corporates as well. If you want to change at the top, because representation matters.
Great. Andy, why don't we go to you?
Yeah, I'm happy you gave me some time to think. So I think when it comes to VCs, we have to remember that a lot of them are operating at what we call like Series A and beyond. So 5 to 10 million in funding and beyond. So the pipeline is a little bit predetermined by that stage. So I think a lot of the work they can do is to really acknowledge and accept where they have gaps, especially in their network and their knowledge, and to connect with communities to help fill those gaps. But to also, and this I'm on the Atomical Angel program, but to fund even like influential figures within those communities so they can really start diversifying that deal flow. And it takes several years, but hopefully that deal flow continues to grow and gets to that stage of Series A where they've been qualified, they're understood, and they can get backed by some of the bigger VC funds. So I think there's a number of things they can do to vote with their money as well as fill in their knowledge and network gaps.
Perfect. And then Jenny, if you want to close us out.
Well, obviously, you know, all the best points have been made, but for me, it's about leadership. So I think, you know, we have to have investment community taking leadership here. We can't sit back and say, oh, it's somebody else's issue. We need people to take leadership and take ownership of this within investment firms, but within the whole marketplace generally. So, you know, it's a shared issue right through the supply chain, right through the value chain. So we need leadership and we need open and shared commitment.
Great, thank you so much. I mean, and there's no need to summarize. I think that's very clear from the three of you. I want to say thank you so much to Jenny, to Andy, and Thea for just sharing so many great tips, knowledge, and experience with myself, and I'm sure the audience as well has really loved this. So for the next session, everyone, at 4:30, we'll have the pitching competition where our very own Jenny will actually return to intro the session. You should all receive a survey to provide feedback on this session, so please do so if you can. And don't forget, if you have time, to check out ventures in the exhibitor area, as well as making appointments with attendees to get to know them. So again, I really hope that you enjoyed this panel session and that we continue to have this conversation. Enjoy the rest of the forum, everyone. Bye.